Now a lot of people get confused with institutional trading, order blocks or something like that. But for you, I have created this pattern here, which is known as the volume candle pattern. And the volume candle patterns will always help you to get very, very good trades. Now, this is not the aggressive part of it. In the aggressive part, we will see how we can take more trades. But right now, let's learn how the volume candles can actually help us to take a trade, and let's also understand how we can analyze the volumes. Okay, so let me put a pen first. Okay, done. So the market is coming down. Market created the first resistance. Okay, it stopped from here, so we mark this resistance, and then we mark the first candle, which is this green candle on the arrow, okay, as our volume candle. This is a volume candle, a big volume was there, right? Then the market went up again, and in the same area it got demotivated with the volume. It got demotivated with the momentum, you can say. Once it started coming down, this candle again is a volume candle, correct? Because of this candle and the trend and the two, okay, first is our trend, which is the first confluence. Second is the volume candle giving us the confluence of again going down, and third is again our this third candle of volume, which is giving us an entry point to go down. So our first trade started from here, extreme low. Of course we will stick to the intraday levels and to the 1:5 RRs to extreme. All right, then again the market after coming here, after reaching this point, market again tried to test the resistance. Let us suppose the market got registered here as the last resistance point. So this became our volume candle again. Volume candle made a lower low again, giving a confirmation to go down back again. Market came up, tested the area again, and on the same place we got a volume candle pattern once again. We entered below that area, put the extreme high as our stop loss so that we are always safe, and at least 1:5 RR as our TP. Understood? The same thing we can see on the bullish trend as well. Market coming from down to up, created the first support. Above the support, market supported, the volume candles are created. Always notice the volume candles. First volume candle is always very big. That is the volume which has been given to the market, right? So then these are the two volume candles. We got our first trade. Market came down a little after hitting our TP for the first trade and made a new support. After finding new support, market will again go up and create a new volume candle. Okay, after the volume candle is seen, you can enter into the trade above that volume candle, keeping the stop loss as the nearest support which was created, and the TP, of course, 1:5. I hope you understood. Watch the video again if there is any confusion in understanding.